Welcome, everyone, to another episode of The Everyday Trader. This is Greg Jensen from Options Animal. Good to be with you today on a day where the market did a little bit of red. Eric, what happened today?
What happened?
What happened?
The Minneapolis Fed president, Neel Kashkari spoke.
That's right. That's right. Now, I know he wasn't the only Fed governor slash president that spoke today, but he's the one that maybe said the most outlandish. I wonder if sometimes they try to outdo each other
No.
when they're making their speeches. See who can get the biggest uh, jab in of what's going on in the economy. Of course, the commentary that you can see right there on the screen that caused the market at about 1 o'clock Eastern time really started to accelerate 2 o'clock Eastern time. Um, is that Eastern or Central? That's Central because it's your.
Yeah, it's mine.
That's Central time. So never mind. That's Central time. So fast forward 1 hour, what I just said. Um, the comments were that basically that at the last month's meeting, he had penciled in two, maybe three interest rate cuts this year. And his comment was that if inflation continues to stall, meaning it stays stubborn and doesn't come down, that there may be no cuts this year. And I don't know if that was the news that really moved the market. Like I said, there were a lot of Fed governors that spoke today. You and I were on a conference call, a Zoom webinar with Cleveland Fed President Loretta Mester. And although her message was basically the same, it just wasn't as drastic. And Krashkari got the the credit for causing the markets to go down. But do you think it was that? What are your thoughts?
I think there's a number of things that are going on right now, and I've lost my screen share. Am I sharing my screen now or
Yeah,
not?
you are. I'm still
Okay.
seeing Yahoo Finance up there with the.
Okay, then I'll stop it. Okay. Yeah, a few things happened today. So you and I are playing this episode ahead of time because of the we're part of this economic organization, the Global Center for Interdependence, and we had a small meeting this week with Loretta Mester and got to hear her speak. And she's, as you mentioned, the Cleveland Fed president who spends a lot of time. They have a research on inflation, so that each one of the Feds kind of has its own specialty on what they focus on, and inflation is the Cleveland Fed's sort of thing. And so it's a good person to talk to understand inflation. And our high level message is that the economy's strong, labor's strong. We're doing pretty well, better than we anticipated. Probably don't need to cut rates just yet. Although I think her words were anticipate cutting later this year. Now that's about as firm as you can get. We have seen the number of cuts gone from 6 to 4 to 2 to now it sounded like maybe one. I don't know. Um, she had some, nice things to hear, but there were really no surprises in her speech. One that I sort of took note of is that, maybe the neutral rate, this is the rate of Fed funds rate where it's neither stimulative or restrictive. So, and she was saying that she always thought that that rate was a little bit lower, like maybe it's 2%, and maybe now it's 2.5. So that's, and that's really a longer term level that she said. We were talking about the dot plots and the summary of economic projections, which comes out every 3 months. And Holly Wade, who's the chief economist for the National Association of Small NBI NBEC. No, is it? What's the small business?
NAIA. No, it's
NA
I
National.
forget the
Sorry,
one that
Holly.
Holly.
Sorry.
Yeah.
They've got like hundreds of thousands of members representing small businesses, and they have a really good organization. They've got a good pulse on business, and Holly did a fantastic job interviewing Loretta. So there weren't any, sort of really bell ringing sort of announcements that were
NFIB.
NFIB, National Federation of Independent Businesses. Yes.
Yeah.
Uh, Druck Miller. No, what's his name? Uh, is it Druck? who's the guy who goes fly fishing with no shirt on?
Dunkelberg.
Bill Dunkelberger.
Bill
He goes fly
Dunkelberg.
fishing in the
Yeah.
nude. No, he takes his shirt off, and he is a hairy man. He goes fly fishing with no shirt on. It's like,
Yeah.
no, Dunkelberger. Bill's awesome. Yeah. Anyways, we've been fly fishing with him with no shirt on. We
Yeah,
digress.
I was going to say, I think the interesting message that I took away from Loretta Mester was that yeah, she does think that the economy is strong, um, but she also feels like they just need more data before that it warrants a cut. She actually mentioned a couple of months more of data, which
Yeah.
is kind of insinuating that they're looking maybe June as the first time for a cut, at least for her vote. I know there's a lot of other members. What's interesting is, so I did the daily market update for the options animal community yesterday, and I opened up the CME tool, the Fed funds futures, the probability of them actually moving rates. And yesterday, it was a 99% chance that they were not going to cut rates in the May meeting. Well, all of a sudden now it's only a 93%.
Mm.
So it's moved a little bit in the other direction than what you think it would. But I don't know. The message I got from the Fed governors that I listened to today and that I've read their messages so far is that they feel like inflation is still pretty sticky, and that although the expectation that they do want to cut down the road sometime this year, it's probably not until the end of the year that we're looking at a rate cut.
Yeah. Consistent with Waller's message last week, and that, that you mentioned a couple data points. And that's exactly what Waller said last week at the New York Economic Club, is that, we need to have confidence. We don't want to risk the opposite of, if we cut too soon, then we can cause a spur in inflation to go the other direction. And I know that the Fed is looking at that. So to answer your question, I don't think we kind of digressed a little bit and talking. Certainly Fedspeak is one of the things that moves the market. I think it contributed. And if we looked at the interactive chart today from Yahoo, that at 2 o'clock there was somebody flipped a switch, and it just so happened that's when Kashkari spoke. But there were a bunch of other things that were going on as well. You mentioned that Blinken had a speech earlier in the day, and then also there's concern about the Middle East. We had a conversation that happened between Biden and Netanyahu with the demand for a ceasefire. And then I saw on a unverified source that Israel is recalling its ambassadors. Now, I don't know from where, but that sort of action causes jitters in the market. We definitely saw it in the VIX spiking up. Earlier in this afternoon, the VIX was in the mid 13s, and then we hit a high, almost went up to 17. We settled at 16. I think it's 1635 is where it is right now. I think that chart might be wrong. And then at the same time, too, here's a chart of the intraday move, and the green line here is oil futures. So we saw oil spike, and that's sort of a telltale indication of concerns in the Middle East. So I think it's a confluence of things that happen in the market today. I think it's Fed speak, not the harsh words that came from Kashkari that maybe spooked a little bit. Geopolitical concerns about, you mentioned the Blinken thing was about Ukraine becoming part of NATO.
Yeah, he had a press conference where he essentially said that Ukraine is joining NATO. And so under Article 5 of NATO, that means an attack on the Ukraine would be considered an attack on the United States. And so the minute that happens, I mean, again, if it's warmongering, it's banging drums and trying to scare people, maybe, but maybe not. I mean, this is obviously a real war that's been going on for more than, well, it's 2 years now, this war between Russia and Ukraine. And obviously the conflict in the Middle East does not add any semblance of calm to the global situation. So yeah, you throw those on top of an inflation situation where the increased gas prices heading into a driving season that could rekindle inflation again. And yeah, maybe the market's getting a little nervous right here. Interesting how most of the move, as you could look at that chart right there, really came in the last hour too. And you brought this up in our conversation before we started recording. Uh, how much of that move is proverbially the tail wagging the dog too, with all of the 0-day options activity that's been going on. There has been a continued spike in options activity, and of course, market makers having to hedge their risk can sometimes see really violent moves, both to the upside and to the downside. It just happens to be, in this case, it was maybe to the downside.
Yeah,
How much do you think 0-day options played into the move in the last hour?
I do. In fact, actually, this I'm looking at this chart, and last Tuesday, I spent some time communicating and diagnosing this particular move because I thought that was a pretty significant move that happened in the day, and this doesn't even look like a bother. Like, why would we even talk about it? It felt pretty big last Tuesday, and then look what happened today. This totally eclipsed, a whole week's worth of moves. But one of the things that we've seen have been these late day rallies or significant moves. They're not every day, but about half the time they're happening going into the close. And they're sometimes happening without any sort of news at all. And they are bullish sometimes, and sometimes they're bearish. And what are they? I do think in part they're caused by, as you mentioned, they're option dealers who have to either buy or sell the underlying, which is the future, that based on options, SPX options or SPY options, that market makers, just to keep their portfolios delta neutral. And it's not anything nefarious in that they're trying to manipulate the market or take advantage of anybody. Just as days go by, especially at the end of the day, this factor of charm. So charm is a Greek that tells you how the delta changes with time, and it's something that most, I mean, up until just a few years ago, charm was kind of a trivial thing that was, you could win a contest at, trivia contest to name that Greek. I used to
Mm-hmm.
joke about it that it wasn't that significant, but it is very significant. The cohort of people who are trading 0-day options are looking at dealer gamma, but what I'm seeing and hearing from them is that the dealer charm is actually more significant, and really in the late day tend, as we get closer and closer to expiration, that their delta changes dramatically based on what's in their portfolio. So there's different things that are happening, and then people who have these options, they're buying and they're selling and they're hedging, and it's sort of it's expected that it's causing volatility in the market. And I think what we saw today was a confluence of sentimental things as well as being exacerbated by 0-day options.
I think another thing you can add to that is a change in leadership we've had in the market over the last, well, really just this first quarter of this year. You could arguably say at the end of last year, middle of last year, for the last 5, maybe even 10 years, the leaders in the market have been Apple and Microsoft and Google and companies like Berkshire Hathaway. Um, that leadership baton, I believe, has been passed this year, particularly the leadership that Apple had at one point dominated. I think that leadership has been passed to companies like NVIDIA and Meta. And when you see the hope being tied to this artificial intelligence drive and what it's going to do to the economy, I think NVIDIA is maybe a little bit of a proxy for what's going on in the market right now. And if you see NVIDIA have weakness, which it has the last few days, showed weakness, I think it maybe adds to that additional volatility potentially to the downside. Now, on the other side of that, NVIDIA is likely the one that will have to be, when you start to see buying interest come back into NVIDIA, that's likely a good sign that the market's also wanting to turn back to the upside. But yeah, definitely seeing some weakness in NVIDIA right now. And, this 850 number is probably going to be pretty important for them, which is pretty close to where they closed today.
So going back to the sentiment that I had about whether or not this was um, what was driving this move? Have we seen some sort of regime shift, a change here? There's a couple of things when I think of that, and I just opened up this sector spider ETF, and I haven't looked at this. So when we see utilities and consumer staples, I mean, everything's red here. So this is some sort of broad-based thing that's happening. But when consumer staples are green and utilities are green, that's an indication. Now, certainly they've done better and they're down, but they're not positive. But it's a telltale sign of portfolio managers rotating their risk exposure. So what happened today? I mean, we'll see what happens tomorrow and as the week progresses, if this is a shift. I don't think it is. And the other reason I mentioned that is because the VIX futures, if we go back, so we're at 1635 is where the VIX closed today. If we go back just a few weeks, we were around 15 and the VIX futures were higher than they are now. So this is the December future. This is the September. And this one here is the, I guess it's it's the April future. So I don't have all the VIX futures on here, but I think the VIX futures are a good sentiment. So that we've seen is a big rise in the front here, and we've actually switched from contango, which is normal for the VIX, to go into is it reversion or backwardization they call it? That's happening in the VIX, which can be really dangerous for anybody trading VIX products, especially these ETFs that are leveraged. They can experience some pretty crazy moves that don't make sense. But this is a reason for me to be a little bit more calm that yes, we saw the VIX futures go up, but not as high as they were last week. And with the sort of move that we saw down in the market today, I think that what's going on is this is a sentimental move in oil and knee-jerk reaction here in the S&P 500. And let's just not forget where we are. We're at
Yeah,
all-time
we're coming
highs.
off all-time highs just a few days ago.
Yeah, just a few days ago, we had just 4 days ago, 5 days ago, we had an all-time high close again. So a week ago, I mean, we're not far off. Although this candle, and I look at this candle and zoom in here, we did break this really phenomenal trend line that we've got here. And it does look like we might get a crossover in the 5 and the 20-day moving averages, and the RSI crossing below. So, I mean, today was a big enough day that it could bring it down. So we need a few more days to confirm a change in trend. That's interesting. I didn't observe that. So I'll keep an eye on that.
Did you notice? So again, referencing back to Loretta Mester, the conference call we were on, the webinar we were on with her earlier today, she talked about the reverse repo market. Very few Fed governors have I ever heard talk about it. And she actually mentioned that it's what we've been explaining to people, that it's an important measure of excess liquidity right now. And it's, as long as that number is still, she referenced it, she thought it was still at 600 billion. And I quickly corrected her. Nope, 438 is where we corrected her in my own mind, right? Of course, I wasn't actually talking to her, but
438, there it is. Yeah. Yeah, it's coming down. Well, it looks like it's hovering here for a little bit. So
yeah, it's kind of found a little bit of support here. If you're trying to chart this.
This is a symptom of too much liquidity, too much money floating around the system. And yes, we're only down to $500 billion or $400 billion. So
Yeah,
439 billion dollars. That's still a lot of liquidity floating around in the system. It can go to zero and we can still
be fine.
Still have excess liquidity. This is just one symptom. This is just because of way too much liquidity. So while this is not zero, our contention has been that the market still is going to trend higher because this money has to go someplace. There's probably too much liquidity in the market. Keeping an eye on this number. And when it goes to zero, it's not a red light panic. It's might be a warning light. But this market, yeah, has gone up quite a bit. A little bit of a breather wouldn't be unheard of.
Yeah, maybe even healthy. It would be nice to see NVIDIA catch up with its PE and maybe let the earnings continue to drive higher. Because I'm still of the belief that home prices are at all-time highs. People have jobs. The economy's doing well. I don't see the Fed getting in the way of the markets, especially in the face of an election. Not that they, again, referencing Loretta, they're very apolitical by their structure. Yeah, right.
That's just you. Well, that was the question about today.
Yeah.
Was, are you political? And I don't think, I mean, that's I mean, she said,
They're
I've been
not.
participating what for 30 years that she's been
Yeah,
going to Fed meetings and she's never heard them talk about politics. It's not like they're going to come right out and say, oh, we want
exactly.
to see, George Bush get reelected. That's not going to happen. Or we want to see
Yep.
Trump in office. But there are, listen, this is a Fed that we know there are people who are trading their own portfolios,
Yeah.
and nobody was. Do you think people were talking? So, do you think it's okay to trade for a Fed meeting? Like nobody's going to talk about that in the meetings, but it was known that there's 3 Fed presidents that are gone because they thought it was okay to make adjustments in their portfolio before Fed announcements. I mean, just that's crazy. And I think my opinion, and I got called, but Horace called me a cynic this week because I was having a conversation about politics, and that is I do think that it factors in as somebody says, well, if my future job could depend on who's the next president and me doing something or not doing something. I mean, that's not foremost in their mind. I mean, they're not going to come out and say, this is the reason I'm doing this because I want to keep my job or get a promotion or something. But I mean, it has to affect them, right? It has to affect their decisions um, going forward. But let's not forget that Powell, who's a Republican, was appointed by Obama. So yeah, I think the Fed's best to be. It's Bianca who's brought it up, who said that the Fed is going to be so apolitical that they're going to end up being political, and they're going in the sense is that they're not going to do anything, and
Yeah.
that could actually end up being political by not helping or by not depending on what they do could harm or hurt one party. Doing nothing probably is better for the person who's not the incumbent.
Yeah.
And I
Yep.
think it's easy for them right now and to not that they're going to come out and say it's political, and they have enough data to back it up and say that listen, the evidence is clear that we shouldn't raise rates. And I think that they can all make that argument, and nobody's going to come out and say let's be political and pick who it is. But that's I hate to be cynical, but I don't expect any changes.
It'll be interesting to see what happens in the market tomorrow. We've got a jobs report that could move markets. Interesting to see if the momentum obviously is to the downside right now. So we'll
And
see.
next week starts earnings.
And next week starts. I thought you could say, and we're going to Summit, and our trend usually at Summit, we have a tendency to create crashes in the market.
Oh, we create crashes because
We apparently.
Yes, we're looking forward to Las Vegas. Those of you that are able to make it, reach out to Options Animal. Just find our website and call the number and say, "Hey, I want to go to this. I want to go to this Vegas summit." So you should come check it out.
Well,
Guarantee you will find it worthwhile for your time and effort. It's one of the highlights of the things that we do, and we don't do them enough. But getting together with you people, our clients, and talking about trading and trade ideas and learning and sharing. We got a lot of good stuff that we're going to talk about. In fact, one of the things that's pretty exciting is we've got Lex Lutheringhausen, former market maker, going to come talk about 0-day options. So
yeah,
if
that'll
you
be fun.
want to learn more about that, yeah.
Okay, so I want to place we're going to Vegas. Let's do
Okay.
our first bet right here on air. We got a Cubbies Dodgers 3-game series this weekend. I'll buy you dinner if the Cubs take 2 or 3 from the Dodgers.
You're going to buy me dinner anyways. How about, did you see what we did to the Rockies? Sweep.
Yeah, nice.
The Cubs are real deal this year.
Cubbies are playing good.
Cubbies are playing. They got a good team. This could be this could be the year.
Well, thanks for joining us, folks.
We'll buy a $100 World Series ticket.
There you go. That is our tradition, right? Beginning of the year, I'll go put $100 on the Dodgers.
That's probably a better bet.
Put $100 on. Well, mine will pay me 140 when they win. Yours will at least pay you something if the Cubs win.
Yeah. Thanks everybody for checking us out. Like and subscribe, share us with your friends, and we look forward to seeing you again soon. Thanks for the comments. I appreciate y'all being here.
See ya.